getting ready. How many people do we have?
I'm not sure. All right, a few more people.
All right. So we are live on Twitter and wherever else. And today we're going to change the format a little bit. We are I'm going to go through my presentation, which is usually I use at different live events. And since a lot of our community members basically said, hey, Alex, you did it 200 times for all these people all over the world, why are you not doing it for us? I decided to spend an hour and give you the pitch that I give mostly people who are first-timers or people that are not very knowledgeable about the crypto community, about why they need to understand this business, why they need to see what's happening here, and why they need to get involved. So the theme of the presentation, I think we are sharing the screen, right? So everybody can see the screen. Kristen is here to help me as always. Is that all roads lead to decentralization. If you're familiar with the old term that all roads lead to Rome, we think that in this world where centralized companies dominate our lives, basically decentralization is the only thing that can get us out of the mess that we got ourselves into. It's not going to be regulation, it's not going to be the government, it's not going to be central banks. And to understand what and why, you will see me going through a bunch of slides that explain what's happening today and how we can change it. So many of you know I got involved with Voice over IP really early, back in the days where you could only use a phone company to make phone calls. And I had this idea that you could take the monopoly away from the monopolists like AT&T and Deutsche Telekom and all these other guys, and bring the power back to the people, right? Put voice over the internet protocol. And back then it was a crazy idea. Back then people looked at me and said, Alex, what are you smoking, right? And so today 4.5 billion people use voice over IP. They don't even know who created it or how it works. But the most important thing is that they pay nothing to communicate with their family, with their friends, with their neighbors. And today we take it for granted. And my mission and my vision is that we can do the same thing for finance, for banking, that people can have the pride of having their money work for them, not just them work for their money, and earning real yield on their money, not just having the rich people on Wall Street earn the yield. So we're going from voice over IP to money over IP, MOIP, and we're going to do it by unbanking ourselves and moving all of these services to the blockchain. So really, this is a war. It's a war between centralization and decentralization. And the reason it's a war is that no one in a centralized world, those guys at the top of that pyramid, and believe me, I'm part of that 0.1%, 0.7%, right? I'm part of that from a wealth standpoint. But none of those people want to give the power back to the rest of the pyramid, right? So you're going to have to take it away from him. I mean, you don't take it away by having a war or having a new political system. That's just not going to do anything. The only way we can do that is by creating a new environment where we decentralize the power. We take the power away from the people at the top of the pyramid, or extract all the value, and give it to the people who create value instead of the people who sit on all the money in the world. So this is a great slide that depict where we are. Most people don't understand that, for example, the Federal Reserve, which existed for over 100 years, has printed more money in the last 10 years, 3 times as much money in the last 10 years than they did in the previous 100 years. So if you ask yourself, what happened? Why did we have to go from this sustainable and controlled manner of printing money to a point where we have to completely increase the money supply and increase the dollars in circulation, or basically get diluted, lose the value of our money so substantially? And the answer is that the 2008 crisis has really changed everything, right? It's basically the genie's out of the box, the Pandora box is open, and there is no way to put that back in, right? Right now, the only way for the Fed and for the government to keep running the economy the way it is to flood the market with dollars. And it's invisible inflation. It's a process that dilutes you from the hard-earned money that you created, right? It does not dilute the people who sit in finance because they know how to manage this process, but it dilutes you. And part of the reason why Bitcoin is up 9 million % in the last decade is because the money devalued itself so rapidly that the only assets that do keep up with that kind of devaluation are things like Bitcoin, gold, and others. So if you look at the history, right, at the last several thousand years, you will see again and again one empire after the next come and go away, come and go away. And besides the Roman Empire, which has been around for about 1600 years, almost every other empire has only survived for 80 to 100 years. And the reason for that is that most countries, they create wealth. For example, Portugal created wealth by finding gold in the Americas, right? Same thing with Spain. Netherlands, the Dutch had the Dutch Eastern trading companies. They created an amazing amount of value through trade, and all of that created an empire for them. Same thing with the French, the British, right? And then came the United States of America. So the dollar, the dominance of the US dollar as a reserve currency is something that everybody uses. It's not a new story. We've seen that again and again and again. And we've seen the devaluation again and again and again. And what happens is that every time there is devaluation, the empire eventually collapses and it's replaced by something else. And today, the Japanese central bank, the European central bank, the American central bank are all printing money like crazy to sustain that the economy and the lifestyle we have today. But all of that is financial engineering. It's not really based on any fundamentals. I would say in the last decade, we have not created almost any value because all we're doing is reaching out to the future, borrowing from our children and grandchildren, and spending that money today. When you see $1 trillion deficit, that is you taking money from your children and grandchildren. So the answer here, the last slide, the last point was that Bitcoin is the only non-correlated crypto assets or assets that you cannot print more of. It's not connected to the US dollar or any of the other fiat currencies. And because of that, the transition is going to be from the fiat diluted currency that we have today into something like Bitcoin. It may not be Bitcoin itself, but it's going to be something on the blockchain. So one of the reasons that we also have a problem is because of a thing called fractional reserves. Now, most of you don't know what that is. They don't teach you that in school or in high school or in college. But if you go on the internet and you just put in fractional reserve, you can see really a lot of great explanation, a lot of videos that you can actually very quickly understand what it is. And the process is how banks legally allow to create money through debt instruments and through the ability to basically lend the same dollars again and again and again and create more dollars in the system. And this leverage, while it's good for economic activity, is not so good for you as the person in the first place who takes your money and deposits it in the first time in the bank. So what it creates is a lot of friction, a lot of uncertainty, and a lot of, like we're going through right now, last few days, where something like the coronavirus causes people to get nervous and the whole system halts, right? And you see the stock market going down, you're seeing a lot of risk and a lot of uncertainty. And just like you can create $10 from every dollar in deposit, when somebody withdraws a dollar, when that first depositor at the top of the screen wants his dollars out because he's nervous, the banks have to withdraw $10 out of the economy. So everything works both ways. And when it works, when there's a deleveraging of the system, and Ray Dalio explains this better than anybody else. Look at Ray Dalio video on YouTube. When the cycle, it's a 70-year cycle, when it goes through a deleveraging, that's where it's a contracting economy process that cannot be stopped. And that's where recessions and depressions come to be, and there's almost nothing you can do about it. So the best protection for these things is, again, a non-correlated asset that is not part of the system, that protects you from the volatility inside the system that everybody thinks is safe. So if you look at the assets in the world today, if you take all the stock markets and all the other stuff that exists out there, it's about 255 trillion, right? That's an enormous amount of money. And this is the wealth of nation that was created through all of this actual economic activity and financial engineering. What most people don't tell you is that behind this 250 something trillion of assets, there's 247 trillion of debt. So there's almost as much debt as assets. But the debt is behind the curtain. No one is talking about that. And the problem that you have is when the asset value drops even a little bit, and the debt doesn't drop, the debt stays the same, that's when you have a recession, because then then there's a transfer of wealth, right? The transfer of wealth goes between the people that own the debt and the people that own the assets. And that's what we're going to go through in the next 10 or 20 years, as we're going to have to basically reduce the leverage in the financial system, right? Right now there's tremendous amount of leverage. Money is free, right? The central banks are printing and giving the rich people as much money as they need. They spend that on leverage, on buying stocks and bonds and other assets, hoping to make even more money. But when the music stops and all the dead guys are saying, give me that money back, there's not enough chairs left for everybody. And that's where recessions and depressions take place. If you look at the United States of America, right, looking at it from a different way, this is a great chart that kind of shows you the banks that have at least 100 billion in assets in the United States since 1990, and the amount of interest that banks have been paying us during that period. You can see direct correlation between consolidation of the banks. Now we have 4 banks left. When there's so few banks, they don't have to pay you any meaningful interest, right? So when you walk into a bank and give them your money, your hard-earned money, not just that they can create 10 to 1 leverage on that money, right, through fractional reserves, they pay you maybe 1%, 1.5%. They lend that money out. They all publish how much they make on your money. They all say, we make 16, brag to the investors, we make 16%, 17%, even 18%. JP Morgan made $36 billion in profit by earning about 17% on your money. Why do they pay you only 1%? Because they can get away with it. Because there's only 3 competitors that they really have, and those competitors all pay very little for your deposits. So I'm mad as hell. I'm not going to take this anymore, and I'm going to create a system that replaces this monopolistic behavior. And their system is basically what we created in Celsius, where we are enable you, the depositor, to keep 80% of that profit. So we don't use 10 to 1 leverage. We are much safer than most of these banks because we don't use fractional reserves or anything like that. We lend at best 1 to 1. We always have more assets than loans. And we charge 10, 12, 13%, and you get to earn, right now you're earning 8.1% by depositing stable coins with Celsius. Again, you can take your dollars or euros or any other asset, buy these stable coins. We only can lend those digital assets, and we give you back 80% of what we earn, which is a much better system than what the banks do. Another way of looking at this, at what happened since 1970, last 50 years, is this great chart that shows you the relationship between productivity and income. And you can see that basically since the turn of the century, this chart goes back to the 1800s, there's a direct correlation. Before there was leverage in the system, right? There was a direct correlation between productivity and income. And basically the people that created the productivity also enjoyed the income. But what happened in 1970, right? 1971, we went off the gold standard, which allowed the government and the Federal Reserve, to print money as needed, right? So we basically start printing crazy amounts of money, and it got even worse in 2008 after the collapse. But also the second thing that happened was that the microprocessor was invented, and basically the computer revolution came to be. And those two trends basically completely separated or created a separation between the people that were writing the productivity. If you were in finance or if you were part of the computer revolution, you did exceptionally well. But if you were in manufacturing or if you were in any other service business, you stayed, your income did not change in the last 50 years. And part of the unrest we're seeing, the political unrest, we're seeing all over the world, including in the United States, right? The Philippines, Turkey, Argentina, the United States, right? We're seeing people basically saying, hey, I don't see that I can move forward. I don't see how me working harder generates anything for me unless I'm on Wall Street or unless I'm in Silicon Valley and I can build the next great startup, right? So part of our idea of solving this problem of inequality, right? This what's being caused here is to change the rules of the game. And to change the rules of the game, you need to create new rules. Decentralization, again, pays people based on their value, based on their contribution, not based on are you in the right industry or not. When you were 18, did you go and study finance or did you go and study computer science? So we think that that is the best way to recreate this, and we think that it's all about supporting decentralization, supporting the 2,000 different projects that are trying to create a new world, a new system in which we pay people for their productivity, not for their choice of what they want to do for a living. So today the digital currency space is very small. There's very, very few assets that you can choose from. Today Celsius, for example, only deals with cryptocurrencies, stable coins, and a few utility tokens. But we want to expand that, right? We work closely with the non-fungible token like CryptoKitties and others, right? I just spoke at their conference here in New York. This is an asset class I love. I think this is a huge potential, but it's still a nascent industry, right? And then you have other things like security tokens and platform tokens and so on. So all these things are being developed, and each one of you has to decide every day. Are you voting every time you're making a deposit in the bank? Every time you use a credit card, you're supporting the centralized system, right? Every time you're not using Celsius or any of the decentralized projects, you are basically voting for centralization and not voting for decentralization. So you have to think about the blockchain as something that is here to act in your best interest, right? And it's not about creating a faster internet. It's not about creating something that is better, cheaper, or faster, but it's all about basically using this technology to. Now we know where Kristen is going on her vacation.
No, my mail's not showing.
So basically, the internet has been an amazing platform to deliver communication, to deliver productivity, but it has not been a good place to enable us to transact financially, right? And the blockchain is a layer on top of that, of the internet, that allows us to exchange values between people. It's safe, it's decentralized, right? But it is an expensive engine. It's not a cheap engine. And unless we put enough transactions on it, it's not going to do what it's supposed to do, right? It requires consensus. It's bulky, but it's definitely delivering something that cannot be done any other way, right? So the revolution, the innovation on the blockchain is the fact that for the first time, 7 billion people on this planet can transact with each other without that toll collector, without that centralized guy at the top of the pyramid, which is exactly what happened with voice over IP. It was just much easier to convince someone to use an app instead of AT&T than it is to convince somebody to use Celsius instead of a bank, right? And that's why we need the community, we need every one of you to help us communicate the fact that, for example, for the last 2 years, Celsius has paid interest every week on time, as promised, and we're paying 8, 9, 10 times more than you're earning in your bank, right? Without all the leverage, without giving loans only to the rich, right? We enable this for everyone, and especially for people who are watching this today. Next slide, if we can.
So sorry.
So the blockchain is an experiment. It's still early days, but you have to think about it as something that is here to act in your best interest. And unless you're supporting it, you're convincing others to support it. Imagine if the internet only had 20 million users, right? It wouldn't exist today. So the blockchain has very, very few users, and unless we bring other people, it will not make it, right? Something else will come and replace it. So another part of this is also these waves of innovation we had, right? First came the blockchains themselves, Ethereum and Bitcoin obviously, and Dash and all these other projects. Then we had middleware, right? These were all kind of services that allow us to interact with the blockchain. And now the dApps are the winning strategies, right? These are the things that allow us to use, like earning interest, like getting a loan, and like using other things. And this, in the same way, today most of the crypto community is retail, right? We're just having like the first wave of crypto funds that are joining. We have market makers who are now joining, asset managers. I just came from a meeting with asset managers who are all excited about getting into the crypto sphere. And like, for example, Celsius now have 212 counterparties, right? Institutions. Besides the 75,000 users we have, 212 institutions that trust us to transact, to borrow, to lend to the community. And these are, as we grow these cycles, we grow the pie, everybody makes more. Because again, we still give back 80% of what we make to the community, to our core retail depositors. So, and this is the first time in history that Wall Street is not in on the next big thing. You are, right? The retail guys, it all started with retail. You are the ones who are going to benefit if you create these waves of innovation around this community instead of ceding it to Wall Street. We have a competitor called BlockFi, right? Look at their investors. They're proudly talking about how there's 16 investors giving them $30 million to build this stuff. All of their investors are billionaires. They're all from Wall Street. They don't care about retail. The last thing they want to do is give you 80% of their income. The only reason they're paying you interest in the first place is because Celsius is, and they have to be competitive. If Celsius didn't exist tomorrow, they will go back to doing exactly what they did in 2017. Charge you 18 to 24% for your loans and pay you zero in interest. So you have to vote with your pocket. You have to vote every day to decide which projects you support, which projects are here to act in your best interest, and who is a phony and who is not here to help this community. So another way of looking at this is also, how do we get people from the comfort zone to the growth zone, right? Today, getting somebody who holds dollars to jump into Bitcoin is a leap of faith, right? You have to be an Olympian, marathon runner to finish the race. What Celsius is saying is, why don't we find smaller steps that people can take to get there? And one example is gold, right? People are much more comfortable going from dollars to gold than they are from dollars to Bitcoin. The second example is stable coins, right? If you tell people, look, it's not some crazy coin that sits in the cloud and is mined by tens of thousands of servers, every dollar is converted into USDC or TUSD or GUSD or USDT, right? And then it earns, for example, with Celsius, 8.1% yield. And when you want your dollars back, they turn into dollars. They don't turn into Bitcoin or something else that you're not comfortable with. So these are the stepping stone. If you are here to help bring people into the community, I think you need to figure out for each person you're talking to, what is their risk appetite, what is their tolerance level, and decide, this person, forget about talking to him about Bitcoin. I'm just going to talk to him about gold. This person, let me talk to them about stable coins because they still want dollars, right? And what Celsius has done in the wallet is give you all these asset classes, right? So you can basically show people, okay, this is how you bring dollars through a credit card or ACH or SEPA. You convert them into any one of these assets, you earn interest, and you are participating in the upside. Now, if you are a risk taker and you want to put all your eggs in one basket and go with Bitcoin and you think it's going to $1 million, you want $1 million. But most people are probably going to put 1% or 2% or 5% in the most risky asset, Bitcoin, and they're going to put more in the other assets. But giving everybody that choice and allowing people to earn, they're still going to earn yield on every one of those assets. Instead of like GBTC, for example, people buying it on Wall Street, right? They're buying Bitcoin They charge you 2% per year, and you're paying a 20% premium, right? That is not acting in the best interest of the community. So I wanted also to share with you another thing we're doing, right? So when you look at the fees bank charge, right, and you're saying, oh, well, there's no choice. Well, I can't go around the banks. Yes, you can, right? Self-pay, the service we are offering inside our wallet, charges zero in fees. There's no deposit fee, no withdrawal fee, no transfer fee, no wire fee, no early withdrawal fee, no origination fee, no fees, you know? And it's even cheaper than using Bitcoin or Ethereum, which do charge you fees for transfers. So Celsius created that because to get mass adoption, you need to enable people to transact with no fees, right? And we are effectively subsidizing these transactions because we want mass adoption. We're taking some of our profits and we're paying the fees that you would be paying to move assets on Bitcoin or move assets on Ethereum to make it really simple, especially for the small earners, for the guy who only has $50 or $100 to be able to transact, because if they went to the banks, the fee is equal to what they want to send. So a lot of people ask me, well, Alex, you know, you're great at explaining the stuff and you're so passionate about it, but can you explain what happened in the last 11 years? We have all these ups and downs, Bitcoin going up, Bitcoin's going down. Every time it goes down 80 or 90%. How do I know it's not going to happen to me, right? And if I understood what happened in the last 11 years, maybe I will feel better about surviving or tolerating these transitions, because most of us get too nervous, too scared, and we sell our Bitcoin just at the worst time possible, just before it goes to the moon, right? So I try to put it together in this what I call a four-man relay race, right? And if you think about Satoshi creating the Bitcoin and then handing off the baton, right? The first people that showed up to grab the baton from Satoshi's were all anarchists. These were people that thought that the Bitcoin and the blockchain was created to really bypass the government or do illegal stuff or whatever. And look, I'm an anarchist myself. I used to be a black hat, right? Hacking into the phone company and doing all, you know, I'm shocked I'm not in jail because, you know, as a teenager, I was out of control, you know, but luckily I realized that my skills could be used as a white hat or as on the good side of things instead of just on the bad side of things. But I definitely was testing the system. So my point is that there weren't enough anarchists to kind of really build a community or build a global system. And just like Satoshi had to hand off the baton to create this thing, the anarchists had to switch to basically hand off the baton, and they handed off the baton to the libertarians. Now, what happened during that transition? The anarchists and libertarians are two completely opposite groups, right? One believes in blowing up the existing system, and one group believes in kumbaya. We're gonna everything. It's shining the sun is shining every day. So what happens in this transition is that Bitcoin loses not 80 to 90% of its value, because as you move the baton between the groups, you lose a lot of people. You lose a lot of users on the anarchist side, and you don't have enough users coming in fast enough to replace them on the libertarian side. So we had about 1 million anarchists, then 3 million libertarians showed up. Bitcoin went up and down during that transition. Then the libertarians didn't have enough people, right? They only had 3 people join them, and they had to hand off the baton to the speculators, right? The speculators looked at the anarchists and the libertarians and said, it's not about blowing up the world, it's not about saving the world, right? It's all about making money. We're going to take Bitcoin, we're going to run it up to $20,000, and then we know exactly who we're going to hand off the baton to. The people who are not here, the institutions, they're going to buy Bitcoin from us at $20,000. And we know what happened, right? Basically, we had this run-up, 20 million speculators joined from all over the world. They were cheering out for Bitcoin. But when we wanted to hand it off to the institution, they laughed at our face. They basically said, you kidding me? Hey, we're going to use a CME to short Bitcoin. We're going to do everything we can to hammer this thing down. And people like, you know, our people in the government have actually enabled that. I mean, this is now public information. that Steve Cohen, not Steve Cohen, sorry, that Mr. Cohen, who was our Treasury Secretary, enabled the CMEs, the futures on the CME, is saying this will temper the price of Bitcoin. So you can look it up. So the institutions basically waited for the price to come down. They are coming in, but they're not coming in fast enough. And my whole point here of this four-man relay race is that we cannot hand off the baton to the people we're trying to replace. Right? The institutions are the guys at the top of that pyramid. The last thing they want is decentralization replacing them. So if you think somehow that big institutions coming into the space is a huge win and that's what's going to get us to the moon, you are wrong. Okay, these guys are happy to make money trading it, but the last thing they want is for this ecosystem to replace the bank, replace Wall Street, and so on. So the only thing that's going to replace or take us there is more people just like us, people like me and you, who believe in this, who are doing it for the right reasons, not just for speculative reasons, and who want to make the world a better place. So, so another way of looking at the same thing is that we went through these three giant waves of innovation, right? The first wave was centralized software. Companies like Microsoft, IBM, and others creating this packaged software that you used to buy and install on your computer. And basically they were the monopoly, right? They ran the software, everything had to be under their control, and so on. And then came a new wave of open source, right? Almost everything on the internet is open source, right? Every time you talk to a server to request information, it's using an open source software like Apache or HTTP or TCP/IP and so on. And now we're just starting the third wave of innovation. It's kind of relying on the first two waves, and it's a wave of decentralization. Because we can't trust anything, we need to create a whole new infrastructure, Web 3.0, and again, each fishy is 10 times bigger than the previous fishy. Right? And the same thing happened with the phone companies. If you look back at VoIP and you see how protocols and industries got consolidated, back in the early 90s, I can promise you, everybody thought I needed to go to a mental institution when I said that TCP/IP is going to eat up either the ATM network or the frame relay network or the TDM network, right? And that's what happened. But it happened over 20 years, and it happened as we scaled the TCP/IP protocol. So the same way, the blockchain is something most people are saying, what do you mean blockchain? Blockchain barely can transact 8 transactions a second. It barely can handle the few projects that you guys have created. How are you going to put 7 billion people on a blockchain? So I've seen this movie before. I know exactly how it ends. But for a lot of people who just live in the moment, not live in the future like I do, all by myself, this is what the future is. The future is the quantum blockchain is going to be bigger than the entire internet. It's going to eat the entire internet because the largest network always wins. And if the only safe place to transact is the quantum blockchain network, then all the other transactions are going to have to run on top of it. So, like we said, look, the public blockchain is going to change the world, right? MOIP is the future. The financial application is the killer app. That's what's going to have to happen first before we use the blockchain for 20 other things. And today, really, there's 3-man horse race to finish this race, right? You have the kind of traditional corporates who say, like IBM and others, who say, hey, blockchain, it's like intranet, right? You don't need the internet. It's not safe. It's public. We're going to create a world for you in which a safe private blockchain is going to do everything you need. And the second horse is the basically governments who come to us now and say, look, we are the Chinese government, or we are the American government. We're going to create a blockchain. The money is going to run on that blockchain, and we're going to control everything, right? And the third option is the public blockchain. Bitcoin, Ethereum, those are public options that are acting in our best interest. Okay, so every project that you see, every project you support, you have to understand which blockchain are they running on. Like Libra and other projects that are the corporate version, JP Morgan, these are not things that are here to act in your best interest. This is the monopolist creating yet another monopoly, creating even a bigger pyramid that will keep you a slave in it forever. So if you support that, you are shooting yourself in the foot. And you have to understand that, and if you're supporting them still, that's fine. But don't come and say, how 20 years from now, gosh, if I was just told that Libra or or using the government's blockchain is really bad for me, I would have never given them our money or used them to move my assets or anything like that. I'm telling you right now, don't make that mistake. So for the scientists among you, I put it also in the great formula, E equals mc squared. Yeah, I stole it from Einstein. And E stands for choices, Ethereum. It could be any letter. It could be B for Bitcoin, or it could be C for cell, token. But Ethereum can only become a dominant platform, a dominant blockchain, if we have enough obviously mass, but it's a mass of users, right, of members. So you need membership, and then you need seed. You have two C's. So we need a community and we need credit, right? The secret to the United States success, right, the success of the US dollar is the fact that the entire world is using the dollar, and half of all the credit in the world is issued in the United States of America. So if you think about, if you replaced E with a dollar sign, it would be exactly the same formula. And that's what we need to create. We need to create more activity, more participation, more projects that will enable us to create an ecosystem that is completely separate and independent from the financial system. But either way, because people are printing so much money and governments are out of control, you have to think of crypto as this asset class that is like a Pac-Man. It's just going to eat away at all the other asset classes. And the good news is that the Bitcoin and the blockchain are not at the early stages. If you look at the hype curve, the Gartner hype curve, and you look at all the different things that are going up and down, we are like down the slope. We already went through all of the hype. We went through, and now the projects that are surviving are projects that are actually have a great way of delivering value to the customers, right? But we still have to cross the chasm. We don't have enough users. We don't have enough people on the platform, right? Satoshi created this thing. You can see again the anarchists, the libertarian speculators at the top of the funnel, and now we thought the institutions are going to save us, but we are about to fall into that chasm. We need to fill it up with something. So if you think of Bitcoin as the foundation and Ethereum as like the next step, what is going to be the third step? A lot of people believe in security tokens. I'm not a huge believer in it. I think it's going to take a while. It's not something that happens tomorrow. It will happen, but it will happen 5 or 10 years from now. And because of that, it's definitely not Libra. We need to find something that we can step on and transition into that mass adoption. And for me, the easiest thing we can do, we as a community, right, is to bring people to use stable coins to earn income. We know for sure that banks are not going to pay you more. Doesn't matter how much money you deposit with the bank. Try to negotiate. Try to walk into your branch and say, here is a giant suitcase full of money, not a little suitcase full of money. Can I earn more? And they'll just laugh at you, right? They'll kick you out of the bank or say, cash, arrest this person, So what we need is something that is easy for people to digest, to join, to experiment, and get to mass adoption, right? So today, the banking model is amazing model, right? They pay you less than 1%. They turn around and lend it to Kristen at 24% on her credit card, right? It's my money just moved over to her, and they get to keep 95% of the value. They keep all that difference, right? So the only thing we invented, and I know people say, wow, Alex, Celsius is so amazing. We didn't do anything. All we did is basically replace that with the model where we charge Kristen 9% instead of 24%, and we give you, the depositors, 7%, or now 8.1%, right? So that is a very simple model. We don't use leverage. We don't use any magic tricks. We don't use algo trading or high-frequency trading or any of that stuff. All we do is lending and borrowing. So I urge you to, again, explain this to others, bring more people to the community, have them try it out. When they try it out, and they understand and they go, gosh, now I get it. I'm never going to use a bank again. Okay, so you can get loans from Celsius at 9%. If you use L'Oreal TV, you can get loans at below 5%. Again, all of these competitors of ours used to charge you 20 to 24% before we showed up. So if you're supporting them, if you're taking loans from them, all you're doing is making sure that Celsius will not exist. And then they'll go back and charge you the rate they used to charge you before we showed up. Right? So you have to choose who you're going to use, who you're going to support, which project, the one that acts in your best interest, the one that's fully transparent, the one that's here to create a new financial system, or the guys that just want to earn and take your money away. We support 25 different assets. We're about to add a bunch more. If you want to see what's coming, we have that section in the wallet upcoming. I think we have 6 or 7 different coins that are about to be added to the wallet. We publish our rates weekly. If you don't get these updates, sign up to our email or watch our Telegram or Twitter. All that information is available in there. And the wallet is amazing, right? I mean, some of you used it. People tell me, guys, you know, Celsius, you guys killed it. I mean, it's a really amazing user interface. You simplified it. You made it so easy for us to use. So download the wallet, try it out if you haven't tried it yet. Show it to your friends, right? Show it other people how you do what you do, how you earn, how you use CellPay to send money to others, right? These are all services that when people experience them, that's when they convert. That's when they come about. So here are a few slides I want to share with you about Celsius performance. So on the left, you're seeing our assets in blue. This is how we've added assets, and the black one is the market value of the Cell token. You can see that finally the Cell token is tracking the increase in assets. And again, we're just at the beginning of the journey, right? We have more users who give us more assets every day. And obviously we're doing phenomenally well. And another way of looking at it is the flywheel inside the Celsius system, right? So users take loans, we collect interest. With that interest, we buy either Cell or stable coins or Bitcoin, whatever you gave us. We distribute that to members, right? So now members have more in assets, and now we can issue more loans, and the cycle goes again and again and again. Now, you can see here that all the money stays inside the community, which is the most important thing about Celsius. If you think about other companies in our community, right? Coinbase, for example, right? They made $2 billion in fees since 2014. They brag about it, right? What does it mean they made $2 billion in fees? That means they took money out of the community. They took profits. They charge you when you deposit, when you withdraw, when you buy something, when you trade something. Every time they charge you a fee, and they take that out. They don't redistribute it to the members of the community. They don't give those profits back to the members, and they're definitely not buying more Bitcoin with it. What Celsius does is buys more Bitcoin, more Ethereum, more Dash, more every one of those 25 assets we support in our wallet. So we are always here buying assets, not selling, not charging fees. We're doing the opposite of what a lot of these guys do. Right? And we paid more interest than anyone else. You know, all these people bragging, have them tell you how much actual interest they have. Have them tell you where their offices are. Have them go and publicly talk about what they've done. So we've paid over $11 million in interest to tens of thousands of our members. Some of it was paid in kind, meaning in BTC or ETH. Some of it was paid in Cell, and some of it was paid with stable coins. But overall, I think Nexo published their numbers, 3.3 million in total since they were created, right? So no one pays you more. No one pays more in Bitcoin. We paid more in Bitcoin than all the other guys put together. These are some examples of our, these are different assets over time. You can see they're all hockey sticks. This is again, and I want to thank the community. I want to thank everyone who's watching us for trusting us and enabling us to continue doing this, because even though we're doing it for you, without your support, none of this will be possible. So latest number we just published, it was just published on Cointelegraph and a few other channels. For 2019, we did 5.47 billion in loan origination. This includes also basically rehypothecation or lending out both the collateral and the principle that we have. 81% of our users deposited more than one. Most of them deposited more than 8 times, right? You've given us over $700 million. Currently, we have over $610 million in AUM, right? 93% of Celsius are hodling sell. That's an amazing achievement. There is no other project in crypto that has a hodl ratio that I think is even 50 or 60%. So this is an amazing number. And again, I want to thank everyone who's holding Cell token, because the hodl ratio is what is a fundamental part of this project, right? If everybody was just selling their Cell token, we couldn't fund our operations, we couldn't do all the stuff we're doing. And I want to thank all of you for your support. And again, 85% retention rate for the top coins. So these are people that deposit with us, keep it with us. That is an amazing number, again, in this community. So if you look at commercial banks or some of our competitors, and you ask yourself, okay, who is acting in the best interest of the community, right? And who is acting in the best interest of depositors? Celsius stands alone. There's no one else in that quadrant. Now, the DeFi guys are getting close, and I love them. I love the DeFi projects. But the way DeFi is structured is not doing the best they can do for you. And I always challenge DeFi to do better, right? So the reason we can pay more in interest than most DeFi is because we earn more. And we earn more because our business model is better than the current business model for DeFi. So we are using parts of DeFi. We are using smart contracts. We are using multi-sig. We are using all the pieces, but we're doing it differently, right? And if you want to understand how it works, go to Celsius.network. A lot of it is explained over there. Again, a lot of the media you've seen, we've been ranked number 1, number 2, number 3 across all the best publications in the world. Forbes and Cointelegraph and CoinDesk and a bunch of others. So, but credit goes to our team, right, for putting that together. The 65 people who come to work every day and fight for you and make sure that you can earn that yield and that reward that you have. Also, some of you, if you haven't met Scott actually invented the blockchain in 1990.
In the 90s.
In the 90s.
Early 90s.
1991 in Belcourt. And if you go to Satoshi's paper, if you go to page 9, most of you probably never made it to page 9, but Satoshi talks about, he gives credit, he puts the references of the people that helped him get to create the Bitcoin. And Scott and his partner Hubbard are mentioned 4 times. 4 out of the 7 references refer to the early work that Scott did. He's an advisor of Celsius. He helps a lot with ideas, with business models, with how to do stuff, and a lot of credit goes to Scott, both for the inspiration as well as for the continued support. I think we're the only crypto project that Scott is involved with, so I thank him. I got to get him to help the other projects as well, because he's a brilliant mind, and we're lucky to have him. A few other announcements. Before I go into these slides, so just a few other announcements. So we are going to do another buyback program. And I think last time we did 10 Bitcoin and 200 ETH, so we're going to do that again. We're going to start it either starting this week or next. And you've seen us make several announcements, like Corbett, our partners in Korea, Simplex. And now you can buy using credit cards. They charge 3.5%. We charge nothing. We negotiate them as low as we can. I think it's the same rate that Binance charges for credit cards. It's the same provider as well. But basically, at least now you can buy with the credit card inside the wallet. You don't have to transfer it. It happens automatically, and you get to earn the interest. And we announced we earned 11 million in interest, as you've seen me talk about it before. That is a huge milestone. Again, no one has ever paid money on Bitcoin, has never earned money. We invented that category. We brought it to the community. We're happy that people are copying us, because now everybody can have it, but we're still doing it better, bigger, and faster than anybody else. Also, you saw us finally get a CMC listing. I know the numbers are wrong. We're working on it. They are going to correct it soon, and we're going to be in the top 100. I hope to be in the top 70, so we'll see where we rank when they fix their numbers. We are working on listing, so we're talking to 2 exchanges and waiting to finalize with them. As I mentioned to you before, I'm not paying listing fees. I refuse to pay listing fees. Bringing this community, all of you, into this or that exchange, they should be paying us because you guys are the treasure, not they are. So I'm fighting hard not to pay listing fees and get listed on the best exchanges. I wanted to talk a little bit about Bitcoin prices. I know people, I've said several times publicly that Bitcoin is going to 30,000 by the end of the year. I still believe in that, but a lot of mining operations, a lot of people got so excited about the happening that they bought now. They're already all in. And you saw the price kind of go up. And now we have a little bit of indigestion. But I think as we get closer and closer to the May event, and after the event, I expect again, starting June or July, it's going to take a month or 2 to get through this indigestion. You're going to start seeing that rally, and you better be participating in it. So record assets on deposit, record community growth. We've never grown faster than we're growing today. Almost every day we have a new record of how many people are signing up with Celsius, how many people are depositing for the first time, how many people are finishing KYC, and so on. And all that is thank you, and it's credit goes to all of you guys for trusting us, for believing in us, and again, convincing others to join the crypto revolution. We'll be attending a bunch of events despite the coronavirus. So hopefully if you see, you can see it on our website under events. There's a bunch of them listed. I'm going to be in Toronto, opening for Sir Richard Branson at I think it's the Sony Theater. April 1st, Fool's Day. And I'll still be there. And then we're going to be in Turkey. We're going to be in Paris. We're going to be in a bunch of other conferences, Panama City, Israel, and so on. Come join us. We're going to be sharing swag and spending time with members of the community, and also throwing a few New York events for all of you as well. Special event to the top 100 hodlers of Cell. If you know who you are, we're going to be putting a VIP event for you as well. And somebody asked me about treasury wallets. We are using some of our wallets. We have about 18 million Cell tokens that are left from things that we were supposed to use for different purposes, like advisors and projects and the community. So we are giving some of these tokens for different initiatives, and you can see a lot of them on our Telegram channel. So if you're not participating, go sign up on Telegram. Also, we're going to be using them for payment for some of our vendors and things like that. So just wanted to mention that as well. I'm going to do a quick run through these kind of like takeaway bites that you can remember. So again, cryptocurrencies are like going from VoIP to MOIP. We talked about that. Exchanges socialize losses, right? How many of you got losses socialized, or they told you, oh, I lost your Bitcoin, and so on? Celsius Network socializes profits. That's all we do, right? We just keep taking profits and giving you 80% of that. Decentralization is, like I said before, is a war between toll collectors and users, right? It's a war. It's not like a little skirmish. It's not a kumbaya thing. Let's sit by the fireplace and talk things out. We win or they win. If they win, things will stay exactly the way they are today, right? You want to bring the next 100 million people, you need less volatility and more utility. And a lot of that has to do with people like us building the utility in the Celsius wallet, other projects that are trying to help you move into the decentralized world. Bitcoin is doomsday insurance. You have to think about it in those terms, right? When things go really bad, that's when Bitcoin shines. And stable coins are like everyday interest, right? It's an ability for you. You're still stuck in dollars, you're still stuck in yen, but at least you're earning some real interest, right? Crypto is here to replace the middleman with middleware, right? We're basically ripping out all the middlemen, all the people at the top of the pyramid, and replacing them with software. Right? So Bitcoin will replace gold, Ethereum is going to replace the banks. Right? And living with the banks is like living in a bad marriage. If you don't know what I'm talking about, because you have a wonderful marriage, good for you. But for the ones of you who live through a bad marriage, that's what the banks are. You have one side of the relationship that just completely ignores the other side. And that's what the banks have been doing to us. And we have not done anything about it. We've not walked away. We have not said our piece. And we definitely have not stopped using that credit card or the money that we're giving them for free. So Bitcoin is a deflationary coin, right? It's very important that you understand that it has a fixed supply. Even though there's more and more being created through mining, that number actually is going down very, very rapidly. And Bitcoin has lower inflation of money than the dollar or any other fiat currency, right? So the coin value just through that is increasing over time. If the size of the community is increasing and there's limited supply, you're going to see the value continue to go up. Now, the downside is that already 4 million coins have been lost because people lost their keys. So the supply decreases through two elements. One is decreased number of new coins being added, and the second one is the fact that the total number of coins in circulation is actually going down because unfortunately people are losing their keys. Now a lot of people think that the Federal Reserve is your friend, that they're here to help you out. The Federal Reserve mandate is two things. One is to keep low inflation and the other one is to keep low unemployment. And both of those things only help the rich, right? Low inflation means that I can borrow money at a very low rate because I'm rich. You can still try to borrow money if you're poor and you're not going to, neither the bank or anyone else is going to lend you anything, right? So the only party that it's helping to is the already rich. And low unemployment is making sure that the masses are not rebelling or causing a revolution because they have a job and they're earning the minimum wage and everybody's happy. So that mandate, by the way, the Fed is owned by the banks. I don't know if some people think it's owned by the government or it's its own institution. The people that own the Federal Reserve are the participating banks, the US banks that all have piece of the Federal Reserve. So what do you think they do? Do you think they act in your best interest? Right? And the US dollar is not your friend. You know, everybody thinks the US dollar, it's such a stable currency. No, it's not. The US dollar is a phenomenal form of payment, but it's a horrible store of value. It actually loses 3 or 4% of its value every year. You just don't see it. But since we went off the gold standard, right, in 1971, the dollar lost over 90% of its value just because we printed more and more dollars, right? So inflation is eating away at your money, right? Now, Bitcoin is a bad form of payment. It's very difficult to pay somebody with Bitcoin and calculate how much, and the next day it's worth twice as much or half as much, but it's an excellent store of value, right? Now, we talked about debt and the mountain of debt and everything else. Again, when you borrow dollars, when you print dollars you don't have, like the US government is doing, right, or the Fed is doing, and so on, you are borrowing from the future. You're actually you're putting an IOU, and your kids are going to have to pay for it. Sooner or later, your kids or your grandkids are going to have to pay for the deficits for all of this money that we are borrowing, right? The government has a $23 trillion deficit, right? The Fed just created over $4 trillion of fake money on their balance sheet, and so on, right? So we cannot bring down the big banks. That's what people tell me, Alex, you're just one man. How are you going to win against the banks? Well, I can tell you I've taken this battle with the phone companies twice. The first time was when I created Voice over IP. The second time was here in New York when we put wireless in the subways. People told me, what do you mean? You can't just put wireless. Who's going to let you do that? And if you put it in there, it's going to cost so much. We got it for free for 8 million New Yorkers who use it every day. How? By basically taking the power away from the phone companies. And the same thing we can do with banks. If you stop giving them your money, if you stop using their credit card and you move to other systems like we created or others are working on, then they have to shrink, right? They're going to have to sell their building, just like AT&T sold all their buildings, right? And they're going to have to behave better and pay you more. When you see them raising rates, that's when you know we're winning. So what is your job? Your job is to bring more people into crypto and stop asking what Satoshi can do for you, right? How much money can I make from Bitcoin? And ask what you can do for Satoshi. How can you bring more people into this revolution, right? That is the key message of this entire presentation, right? It's not about profitability or becoming rich. It's about changing the world, making it a better place, doing good first, then doing well. You're still going to participate in it. You're still going to have a lot of money. But if you help the revolution, you're going to be able to look at your kids' and grandkids' eyes and proudly say to them, I'm part of this. This wouldn't have happened without me. Right? So we have competition. There's all these other people who are now offering this and offering that. Make sure you read the fine print. Celsius still offers more, charges less, and has done it better, faster, and cheaper than anyone else since we were created. We've set the bar really high, giving back 80% of what we make back to our community. If anyone wants to beat us, they're going to have to give you 90% or 100%, or like some people do today, 120%. They basically subsidize what they give you. But that's a good thing. It's good for you. You get to keep all that money. This is a picture that one of our community members created to kind of depict the battle between the centralization and decentralization. I love it. I wanted to share it with you. And credit goes to Johannes who worked tirelessly for hours to kind of capture the moment and capture the battle, the epic battle that we're going through here. Just one word about our team. Again, 65 people all over the world. Israel, Serbia, Berlin, London, New York, San Francisco, Atlanta. We have 3 people in Atlanta. Love you guys. Thanks for all the hard work. It's been a very tiring, long year, but we're just getting started. We're hiring another 5 or 6 people as we speak. Also, if you're interested, if you think you're part of this revolution, you want to contribute, send me an email with your resume, alex@celsius.network, and tell me why we need to hire you. Why are you that special individual that get to be part of the Celsius team, and why you're passionate about it, and how you're going to make the world a better place. We have a few minutes left for questions. Kristen is going to give me a few. We're going to try to answer some of your questions as well.
Okay. We also are going to do another live stream tomorrow from Tel Aviv.
Live stream tomorrow from Tel Aviv, yes.
You'll see the beautiful office, and they'll answer more of them, but I have the top
They have an
5.
office right on the beach. They don't have to go to the beach. They're on the beach. Amazing views. I don't know how they work with that kind of view, but yes. First
Okay.
question.
The most popular question is, will there be a Celsius credit card?
So credit cards are products banks create to charge you a lot of interest. What I'm trying to do is the anti-credit card. So it's going to be a card. It's going to be inside your phone, right? And it's going to do magical stuff, but it's not going to be a credit card issued by a bank, because when you issue a credit card, you're giving your money to the bank. You're empowering the banks. You're empowering Visa and MasterCard. That is not what we're here for, right? There's going to be 10 other companies who are going to offer you cards with rewards and this and that, and you're welcome to use them. Just remember, every time you use that card, you are paying Visa, you are paying MasterCard, you are paying JP Morgan, you are paying Citi, or any of the banks that you work with.
Will Celsius offer the option to swap or exchange coins in the app?
Yes, that is coming soon. Next release, you will be able to exchange, you will be able to purchase with money instead of with credit card, so no fees. And those are things that will be instant. We're also going to be able to purchase sell inside the wallet, which I think is going to create a lot more demand for sell. It's going to make it so much easier for everybody to buy, sell. So all those things are coming.
Okay, what coins are you adding next, and when can we expect to see them in the app?
So all the coins are listed in the wallet. You have to open the wallet and go into your, here, we'll do it together. I'm just not going to show you my password.
At the bottom of your portfolio.
Yeah, so if you look at the wallet and you go here, right, if you scroll all the way down, you should be able to see,
On the wallet screen.
sorry, on the,
Wallet. Top.
yeah, that's what it was.
Scroll down.
Oh, sorry, here. So if you look at the wallet and just look at coming soon, you'll be able to see all the coins that are coming: Algorand, Tron, Saga, Binance, Tether Gold, and so on. So a lot of these assets, again, we add assets that are yielding. It's not about the coin we love or we don't love, right? So it's about, can we generate yield on this asset? We only put assets that we can earn money for. Because if I'm not earning money, what's the point of me holding it for you? You can go and hold it somewhere else, right? So we invent mechanism to earn money on BNB, which no one has done, right? No one pays the interest on BNB, or on gold. No one in the history of mankind has been able to pay interest on gold, right? A positive interest on gold. We will be the first time in history that's available. It's not easy. That's why it's taking a long time. And then we have to address all the regulatory stuff. But that is exactly what we're going to do.
Will Cell be listed on more exchanges?
Yes, I talked about it. Cell is going to be added on multiple exchanges. Again, it just takes time. We are demanding tough terms, and the bigger our community gets, the more we can negotiate on your behalf, right? Because as we have hundreds of millions in assets, everybody now wants Celsius, right? So same thing goes for exchanges, same thing goes for partners. Everything gets easier when you have hundreds of thousands of users where others don't.
Okay, the last question, people are wondering when they can buy coins via bank transfer or debit card.
So next version will enable you to use ACH and SEPA for Europe, and you'll be able to purchase several coins, not all of them, but you'll be able to purchase several coins, stable coins, as well as Bitcoin, Ethereum, and others, right inside the app, and start immediately earning on them or take a loan against it, and so on. So these are the fundamental services, right? We have three things. We pay interest on assets. We give you very cheap loans. You could borrow against the assets. You don't have to sell the coins. And I invite you again to take a loan and try it out. You can also pay the interest and sell, which gets you down to like less than 3.5% per year. Anywhere in the world, you can borrow money at 3.5% per year and pay it and sell token. Okay, it's a no-brainer. So if you haven't done that, apply right now. If the option is not available in your wallet, that means that you're blocked in the country or in the region that you're in. So we're working on enabling those things. And the third leg of the stool, besides interest income and loans, is the ability to purchase asset, which we just introduced. And we're going to be making it easier, faster, cheaper, better all over the world. Thank you for participating. Thank you for helping us. Thank you for listening. Share this video. Explain to people. Bring people on. Let's make the world a better place.